Welcome everyone to the channel. This is Odun Business Consult. We are continuing our lesson on how to prepare trading profit and loss accounts with a technical example. Okay, so we started the other time with example 1, which has to do with WASI May-June 2009. So if this is the first time you are joining us, go back to the previous video and watch that one to the end so that you understand what we are doing so far. In the previous video, we started looking at the additional information. As I said in that video, if you are confronted with a question like this and you are asked to present a final account for a sole trader, which is trading profit and loss account for a specific year, the first thing that you have to look at is the additional information, which is also known as the footnotes, because in additional information you get extra info as to what to do about some of the items that it has been presented in the trial balance. Okay, some of the figures over here needs to be adjusted, so I advise you guys to always consider the additional information before presenting the final answer. And the additional information, when you are handling it, you have to do it at the working section. Okay, so in your solution you have to dedicate a section for workings, and the workings is mainly meant for the additional information. Okay, if you don't do that, it will be very difficult for you to get some of the answers right. Okay, you might get some of the figures wrong if you don't present or if you don't do working. Now let me also emphasize that there are so many ways to present trading profit and loss account for a sole trader. Okay, I will not say that this is the utmost solution, but this is one of the best way to present final account for a sole trader. Okay, so you might, maybe in your secondary school, your teacher will give you a different format in presenting trading profit and loss account, or in solving trading profit and loss accounts, and he might be true. Okay, so I will not say that this is the ultimate solution for that, but it's one of the best way that you can ever present for trading profit and loss account. Okay, so if you have any other suggestions, you can leave them in the comment section. Okay, with that much ado, let's start the journey for the day. Okay, so the other time we got to we treated item 1 and 2 on the additional information. So what is left is item 1, 2, 3, 4, 5. Okay, so it is left with item 5 on the additional information. So today we are going to consider the third item on the list, which has to do with miscellaneous expenses prepaid at 30th June 2007. And when you say miscellaneous expenses, we are talking about, or in accounting, when you say miscellaneous expenses, we are talking about petty expenses that has been put together. Okay, it has been put together to make a bigger amount. Okay, maybe you have numerous smaller amounts relating to different expenses, and because they are small in nature, accountants, in a way for easier understanding, they can put these expenses together, and the heading that they normally give it to such items or such heading is known as miscellaneous expenses. Okay, so that's the meaning, one of the meanings that you can get for that. And when you say prepaid expenses, they are the expenses that payment has been made for, okay, but the benefit is yet to be consumed. So a business might rented out an apartment, and every year they are to make payment of, let's say, 2,000 for that rent, and for a particular year they've made, let's say, instead of 2,000 they've made payment of 4,000 at the end of the accounting year. So obviously the 2,000, the extra 2,000 that has been paid for becomes prepaid expenses paid in advance, or expenses prepaid, okay, because it is at the beginning of the accounting year. Sorry, it is the payment is made at the end of the accounting year. The amount is not part of this year's expenses, but rather it is meant for the incoming or the coming accounting year. So over here 2,000 was paid in advance, and it was paid at the end of the current year, which is June 2007. And because we are at the end of the year, this amount being paid for is not part of this year's expenses, but rather is made, or the payment is made for the coming year accounting expenses, which is 2008 per the question that you are considering. Okay, so the accounting year for this business was 30th June 2007. That's what we are presenting the account for. But this payment has been made at the end of 2007, which the benefit will be consumed in 2008. So this 2,000 becomes something that we have paid for in advance, but the benefit we are yet to consume. And because we are using the matching concept, or because we are using certain principles when we are recording transactions or preparing accounts, this 2,000 should be excluded from this amount that you see here. So let's go back to the trial balance. You can see that the miscellaneous expenses has been made over here, which is 65,000, meaning out of the 65,000, 2,000 is not part of this year's expenses. It is rather meant for 2008, which is the coming year. And the matching concept says that we should match all expenses against revenue for a specific year. And in 2007, or the account that we are presenting is for 2007, and that 2,000 amount which has been paid in advance is for 2008. So what do you have to do? We have to take it out from this 65,000. Okay, and in accounting, if you want to take something, or if you want to reduce certain amounts, we don't just cancel it, we open account for that. So in your workings, you have to open miscellaneous expenses. So let's do that. I've already opened it over here, so open it. And I believe you know how to open an account, which is a T account. This is the debit side and this is the credit side. Indicate your currency sign at both sides of the account. Now if we are done, let's go back to the question. If you see an expenses on the trial balance, okay, if you see any expenses on the trial balance, it means that amount has been paid for. If you see any expenses, on a trial balance, it means that amount has been paid for. Money has been moved out of the business for such expenses. And in accounting principle, if you pay expenses by cash or bank, what do? You debit your expenses account and you credit your cash or bank account. I believe you know that principle. So over here, because that's been paid for, we copy it from here. Okay, just copy it from here. So in your case, you just write it, and when you come to the expenses account, you just write either cash. Here the question didn't specify whether it was paid by cash or check, so we can use check, cash or bank. There's nothing wrong with it. Then we paste it. Okay, so in your case you write it cash, meaning, as I said earlier on, any expenses that you see on the trial balance, it means money has been paid for that expense, unless otherwise stated in the footnote. But in the footnote, in our case, there is nothing saying otherwise. So we assume that that expense has been paid for. That's the total amount that it has been spent on miscellaneous expenses. And in additional information, we have been told that out of this amount, 2,000 is not part of this year's expenses, so we have to take it out. So in taking it out, what do? You write here balance carried down. Okay, so you write balance carried down because it will be brought forward in the coming accounting year. So here is what? 2,000. Or you can write prepaid carried down, or you can just write, okay, prepaid. Let's make it prepaid. Okay, so I think this will be the right way or the right thing to do. So prepaid expenses, you can add the expenses to it. So let me add it. Prepaid expenses. Okay, so it's 2,000. So this is how you can record prepaid expenses when you are solving trading profit or loss account. I believe you are good with such an explanation. If you don't understand it, then leave it in the comment section, okay, and I will throw more light on your issue for you. And if this is the first time you are watching me and you have not subscribed to the channel, please, I urge you to do that. Subscribe to my channel so that I'll be encouraged to do more educative videos for you. Thank you very much for subscribing. So let's continue with our journey or with our work. Now we are done with item 3 on the additional information. Now let's come to the fourth one, which says that administration expenses accrued at the 30th of June 2007 amounted to 3,500. These accrued expenses and is an opposite of what we have seen under prepaid expenses. Accrued expenses, they are the expenses that the benefit has been consumed in the current year, but the payment is yet to be made. Okay, so assuming the business is to make annual rental of, let's say, 3,000, and at the end of the current year, nothing has been made or no payment has been made for that expenses. Even though the payment is yet to be made, okay, but the benefit has been consumed because you have occupied the premises. Okay, you have used the landlord premises and you are owing the person. So when you say accrued expenses, you are talking about the expenses that you have consumed the benefits, but the payment is yet to be made. Another name for accrued expenses is what? Arrears or expenses in arrears. Okay, and it could be at the end or at the beginning of the account year, but in our case we are dealing with an expenses owing at the end of accounting year. And how do we treat it? And the way we treat it is opposite of what we have seen under prepaid expenses. So accrued expenses or expenses owing at the end is being added to what has been paid, or it will be added to what we see on the trial balance. Okay, so when you come here, administration expenses, which is 28,000, this is what has been paid for, but the actual payments or the actual owing for administration expenses must cater for or should also add or should also consider this, because the benefit has been consumed but payment has not been made for that. And we cannot say that because you have not made payment for, we cannot or we shouldn't add it to our administration expenses. If you do that, you are going contrary to the matching concept. The matching concept says that we should match all expenses for a specific year against the revenue for that year. Okay, and these administration expenses, it is an expenses that we have already benefited from its benefits, or we have consumed its benefit, but we are yet to make payment, and it is part of this year's expenses. So any expenses at the beginning of an accounting year is part of. at the end of an accounting year is part of the current year expenses, and it should be added to the one that we've made payment for. So as I said earlier on, any expenses that you see on a trial balance means payment has been made for. So this is the total payment that has been made for administration expenses. Okay, for 2007, this is the total amount that the business has made payment for. And because we are having owings over here, we should also add it to the one that we have paid in the trial balance. So how do we add it in the format of an account? So the same thing that we have to do here. Let me copy the heading from here. Administration expenses, I'll copy. In your case, just write it. I'm using Word and Excel, so I can easily copy it. Then I'll come here, come and open my account nicely. Okay, so I'll open my account nicely. Let me open my account. Administration expenses. Nicely, I will indicate my currency sign. Don't forget to do that in the examination. Okay, now let's go back to the question. So here, what has been paid for is what? 28,000. So here it will be cash or bank, but I prefer using cash. If you use bank, you are not wrong, because the question didn't specify the mode of payment. So here we write cash. So the amount is how much? 28,000. Now let's go back to the question. And additional information, we have owings for administration expenses at the end. And as I said in the explanation, I said owing at the end of an accounting year is part of this year's expenses, and it should be added to the one that you have paid. So 3,500 is part of this year's expenses. So you write accrued expenses. Okay, that's the name that you can give. The amount is what? Let me confirm it again. 3,500. So you just write it 3,500, and you are good to go. Is it not simple to do it this way? It is very simple. So this is how we treat an expenses owing at the end of accounting year. It should be added to the one that you see on the face of the trial balance, or the one that has been paid for that year. So expenses owing at the end of the accounting year, is the treatment is the opposite of expenses prepaid at the end of the accounting year. I believe we are good to go. Let's see what is next on the item. We have a year interest on the loan. I think here I made a omission. On the loan is due and unpaid. A year interest on loan on the loan is due and unpaid. So let's see the trial balance. If the business went for loan, let's see. Yeah, so we went for 10% loan. It's a 5% loan, which is 100,000 Ghana cedis. And the question is saying that, or per the question, or what you see on the trial balance, it means every year we have to pay 5% on that loan, on that amount as an interest. Okay, if you go for loan, you have to pay interest on that. If you borrow some money from the bank or from your creditors, you have to make payments as what? As an interest on the money that you borrowed. The lender always will charge an interest on the money that he or she is lending to you. Okay, so as a business, if you go for loan from a bank or from your creditor, you'll be expected to make annual payment as well as loan. So from the question, you have to pay 5%. So 5 over 100 times 100,000 will give us 5,000. So every year the business is supposed to pay 5,000 cedis as an interest on the loan. And the question is telling us that the loan that you've gone for, the interest for that year is due. What it means is that we are to make payment for that. The time for us to make payment on the loan is ready. I mean, we've gotten to the time that we have to make the payment. So as at the end of the accounting year, the interest on the loan we are supposed to pay, but we have not made payment for that. That's the meaning. It's due and unpaid. We have to make payments for it as at that date, but the business may be due to one or two reasons. They've not made payment for that. So how do you treat it in your books? So owings at the end of the accounting year is a liability. Okay, owings at the end of an accounting year is a liability. Something that you are owing, you are supposed to pay. You've not made payment for that. So you are owing, and every owing in accounting is known as what? Liability. And you see how we can treat it in our balance sheet. Okay, so let's open interest account. That one too, let's open account for that, so that everything will be simple for us. Interest on loan, we can write interest account. So let me underline it nicely, like so this is how you have to present your answer. Okay, very nice and neat. If you do it this way, the examiner will be happy to give you all the marks. Okay, so I'll present my Ghana cedis here. I have my Ghana cedi here. So it's due and unpaid, and interest is an expense that will be taken to the profit and loss account, right? So here it's a liability. So it should be a liability has a credit balance. So here at the end of the year we take it to profit or loss. So P, let me write it for profit or loss. Profit or loss account, and the amount is how much? 5,000 cedis. We have 5,000 cedis. So at the end of the year you have to take it from here. So when you go to your profit or loss account, you see this item over here. You see it, interest on loan. It's an expenses. Okay, and liability has a credit balance. So at the end of the day, when you close this account, you have a credit balance which will be taken to the liability section in the balance sheet. You've not gotten there yet, so when you get there you know how to treat it. So as I said, the expenses at the end of every accounting year is a liability, and the expenses paid in advance at the end of the accounting year is an asset. So don't forget that. So over here I was supposed to give you more info on that. Miscellaneous expense prepaid at the end of the accounting year was 2,000. Here is an asset. Okay, when you go to a balance sheet, I will explain to you why it's an asset. Okay, so put it in your mind. Expenses paid in advance at the end of an accounting year is an asset to the business, and the expenses owing at the end of the accounting year is a liability to the business. So put it in your mind. Put it in your mind. I believe you are following me keenly. All right. Let's move on. We have stock at 30th June 2007. So this is a closing stock. There's nothing that we do it on it right now. We use it later. We'll come back to that. Now the last one, but not the least, we have provide for depreciation as follows. So we have to provide 5% on cost as depreciation for freehold building. So let's come here. You know that every year we have to charge a depreciation. So depreciation here, we just write a broader heading, depreciation. If you don't understand it, then leave it in the comment section and I will explain it to your understanding. I will throw more light on that aspect for you. Okay, so the first one we have the first one is what freehold building. It's a fixed asset. It is how much? 5% on cost. So what is the cost for freehold? This is straight line method for charging the depreciation because it's on cost. A fixed amount is being charged every year for that asset as a depreciation. So any fixed amount charged on the cost of the asset for every year, the method being employed in that aspect is a straight line method. Okay, we have two major depreciation method. We have the reducing balance and we have the straight line method. But in our question, what we are facing here is a straight line method because a fixed amount is being charged on the cost of the asset as a depreciation for each year. Okay, and it's easy to compute. The cost for the freehold building at cost is 250,000 cedis. So let's do the workings. So we have 5%. Let me see if I have your multiplication sign. This is not working. Let me see. 5% on cost. I think I'll use the calculator to do that. So on cost, we have 250,000 as a cost. As a cost, so 250,000. Pardon, I'm coming. So yeah, 250,000. So if you punch it on the calculator, what are we getting? So 5/100 times 250,000. We are getting 12,500 as a depreciation for that asset. 12,500 cedis. Okay, that's what we are getting. I want to format it. It's not working because of 4,032. Okay, and now I can format it. It's not working because I've added I've made it up on the name, that's why. So let me do it manually. So if you punch 5% on 250,000, we are getting 12,500 as a depreciation for freehold building. Okay, the straight line method is not a depreciation. Reducing balance method. Reducing balance method has a different way of computing for depreciation. So the second one that we have it here is let me see. Let me check the question. Is what we have features and fitting. So I'll copy it here. Features and fitting. That one is 10% on cost. So 10% on cost. So 10%. We have 10% on cost. You see the cost very soon. 10% on Composite is how much? We have the cost for features and fittings is how much? Let's see, where is it? Okay, features and fittings. The cost is 320,000. So it's 320,000 to this. So if you apply the 10% on that, what are we getting? So 10 over 100 times 220,000, we are getting 32,000 as a depreciation for that. So 32,000 as depreciation for that asset. So this is how we can get the depreciation for these two assets. And somebody will ask, how are you going to treat this depreciation? This is what you take to the profit and loss account for that year. Oh, I beg your pardon, I didn't name my working, so let's do that. In the previous video we did that, and I asked you to do it because you give reference. So this is working 4. You give reference to some of the figures in your final presentation. We have workings 5, we have workings 6, then we have workings 7, right? We have workings 7. So here the depreciation, we can get the total for the depreciation. Okay, as I said in the examination or in the final answer, because we have made our workings very nice and neat, we can just give reference. So this, so it is we can add this to that. So we have 12,500 plus 32,000, we are getting 44,500 as total depreciation for the year. So this is the amount, that 44,500 is what we take it to the profit and loss account as a depreciation. Okay, so here let me bold it. You can present it line by line item, or you can take the sum of this and that. Okay, because we have done our working very neat and nice, if you give a reference to it on your final presentation, the examiner will know where this figure is coming from. Okay, don't worry, when you get there, when you present the final answer, I will show you how to do it. Okay, so just do it as I've done it over here. You'll get there. Don't worry, when you get there, you know how to do it. When you get to the river bank, you know how to cross it. Okay, don't worry. Now let's see if it is left with anything that we have to do on the additional information. Now let's see, we have 1, 2, 3, 4, 5, 6, 7, and our workings too, we have 7 workings. It means we've exhausted all the necessary workings that we should do for this particular question. So what is left now is to close off the account. Okay, now we've opened the individual account and you must close it. We are presenting our final account. When you open your accounts for workings, you have to close it where you can know the actual amount that will be taken to profit or loss account. Okay, so let's see, let's start with the workings 1. I believe you know how to balance off an account. You compare the two sides. So this and that, which side is having the bigger amount? The other side is having 165,000. Here is having 5,000. Obviously this is bigger, so this amount becomes the total for the both sides. So we have 165,000 165,000 as the total. Okay, so let me close the account, then top, you close it. So okay, so yeah, so here to the total will be 165,000, because this is how we close an account. And you have to insert the difference at the side with a smaller figure or amount. So here is having the smaller figure, but because you are preparing profit and loss, the difference will go to profit or loss, or P&L, profit or loss account. So here to be profit or loss. Okay, that will be the difference. What will be the difference? So here the total is what, 165,000, but you have only 5,000 here. So for you to get the difference, you take the smaller amount from the total. So you have 165,000 minus 5,000. Okay, so you are getting a difference of 160,000. So 160,000 will be taken to the profit and loss account for okay, sorry, so I've made a mistake here. Here we are dealing with debtors. Okay, debtors will be in the balance sheet. So we have, it's supposed to be balance carried down. So this is not an expense, so it's an asset. An asset will appear on the balance sheet. So balance carried down. So obviously the balance brought down will come here. So this is the amount that will be taken to the profit, sorry, the balance sheet. Okay, don't forget that. Sorry, I made a mistake in my previous submission. Brought down, I didn't check the item. So you see, in the examination you shouldn't rush. Always check the item before you close it, so that you know what to write as a difference. Okay, so we have successfully done with the debtors figure. Let's move on to the next one. We have debtors. This one is an expenses, so obviously, sorry, bad debt is an expenses, obviously, to go to the profit and loss account. Without wasting my time, let's close it. So the difference will be 5,000. So the total will be 5,000, because here is having a bigger amount. Here is 5,000, here is nil. So the 5,000 becomes the closing balance for both sides. I believe you know how to close an account, so no need to waste much time on that. No need to waste much time on that. So we have it here. Then we close it. Don't worry, we'll finish very soon. Okay. We have, so obviously the difference will be inserted at the smaller side. So here will be profit or loss. I'll make it P&L like this. Here is 5,000. This 5,000 will be taken to profit or loss. Here there will be nothing like balance brought down. To be taken to profit or loss account straight away. And here, where is the third working? Our third is here, provision for bad debt. So here too, it's an expense. The difference will be taken to profit and loss. So let's see. So obviously here has the bigger amount. So we're gonna have it here, or we're gonna have it here. That means the total will be 9,000. So let me close it. So do it the way I am doing it. Okay, so here be on the same side, 9,000. Close it. Let's down. So the balance. So let's track the difference. Here is 9,000. If you add everything here, is 9,000. If you add everything here, it's not 9,000. So what is the difference? So we take this figure from the total. So we take 8,350 from 9,000, and that difference will go to profit or loss, P and L. Okay, so here we have, so if you have 9,000 and take away 8250, you will get 750. That will be taken to profit and loss account. In our next presentation, I'll give you more explanation on this provision for bad debt. Okay, why we are getting or we are taking this to profit or loss, but not this. Okay, so put it in mind. But here, let's want to close the account and end the section for this presentation. In the subsequent ones, I'll give you explanation on this, so you understand it much better. Okay, so let's move on to the fourth working. So we have 6,000 here, 2,000 here. Let's see what we can do. So the total is obviously 6,000 because here is having a bigger amount. 6,000. Let me close it. Here obviously it will be 6,000. So where will the difference go to? The difference will be at the credit side, which will be taken to profit and loss. So it's an expenses. 2,000 from 6,000 we will get 4,000. So 4,000 will be taken to profit or loss account. Okay, we are done with this one too. There is nothing like balance brought down because we are presenting our final account for the year. Administration expenses. So what will be the total? You add this and this, this and that. So we have 28,000 plus 4,500. So we are getting 31,500. So we have 31,500 as an expenses for administration expenses for the year. Okay, we have 31,500. I want to format it so that to be very nice and easy to read. And what will be the difference? Obviously there is nothing here. The difference will be 31,000, which will be taken to profit or loss account, which is 31,500. So that's our fifth working. Let's move on to the sixth aspect of it. Interest on loan is an expenses. Okay, it has not been paid for, so it's an expenses too, and it has not been paid for. What do? You just also close it 5,000, but here mind you is a liability, so that amount will also appear on the balance sheet. Don't forget that when you get there, you will do that as I explained on that earlier on, that expenses owing at the end of account year is a liability, and for that matter it should appear on your balance sheet. Okay, it should appear on that. So here the difference, profit or loss. So we have balance carry down, balance carry down. Okay, so liability, you have to take it to carry down. It is 5,000. So obviously the drawdown will be here, balance brought down brought down will be how much? 5,000, and to be taken to the balance sheet. Okay, so I think with this we have successfully closed all the accounts, and you know the necessary amount that will be taken to the profit and loss account, and the one to be taken to the balance sheet. So here too, let's see here, profit or loss, you have to indicate it to be going to profit or loss so that we don't forget when we are presenting the account. So this total will appear on your profit or loss account. How did we get that? We added the depreciation for this and the depreciation for that, and have this. When you get there, we have different way of presenting it on the profit or loss account. When you get there, I will show you the two ways, okay, or the many ways to present them. In fact, with this I'll end the video here, or I'll end today's lessons here. I believe you've enjoyed it, and if you have not subscribed to my channel, do well and subscribe to that. Share the video, comment on them. If you have any doubts, any suggestion, leave them in the comment section, okay. So this is the end of today's lesson. We've seen how to treat prepaid expenses appearing at the end of an accounting year and expenses owing at the end of an accounting year, and we've seen how to treat the loan interest that has not been paid but it is due, and how to compute for depreciation using a straight line method. And we've seen how to create an account and how to transfer or know the figures to be transferred to the profit and loss account. Thank you very much for being with me. I think this video is quite long, but it is benefit for all of us. I love you all. See you in the upcoming video. Bye bye.